All right, traders, we got a huge week ahead of us, and I'm going to be preparing you to trade the best setups at the best prices. We are going to be going over an in-depth price action analysis on the SPY and, of course, the top stocks that I'm planning to trade into this week. We have Kellogg's, K-Stock, Crocs, META, Siga, Tesla, Walmart, XOM. We got some big earnings coming up. I'm going to share with you, for those of you who are interested in these earning plays, I'm going to share with you my current thoughts on those as well. And we're also going to be going over how to trade the best setups at the best prices, guys. So let's get straight into it. So first things first, we're going to be going over the SPY. So in terms of the SPY, if you guys have been watching, the previous videos, I was explaining in order to really see that bull flip where the bulls are just really going to be in control and just continue to rocket this up, what would really need to happen from a macro perspective on the SPY, we would need to see right here this key level 401.44 slightly above the monthly highs turn into a support level. And as you can see right here on Thursday, this is the day where it reacted as a support level. You got a nice strong wick here on the daily, bottoming out at that key make it or break it level, now pushing above monthly highs. So as of now, the bulls have taken control for the macro side of the SPY. In order for the bears to really take control, they're going to have to, in terms of key breakdown, go back under 400s. But in terms of where are we at right now, the bulls are currently in control for the macro. Now, there is still going to be some good micro opportunities in terms of quick in and out scalps for put options. But let's break down in terms of where to be buying put options and where to be buying call options as well. So let's get right into it. So what we're going to look at is we're going to take a look at the SPY right here, and we're going to focus on these main levels. So heading into this week, I want you to focus on $417.39. There's a gap to fill on the SPY at $417.39. This is where we are expected to see some resistance. We're expected to see a nice little micro pullback, a nice little micro bull trap. Now, another key level, and this is the best level, I want you to write this one down as well, $429.06. That is truly the best level. So those are the two best levels in terms of to scalp puts. Look for the bearish reactions, look for the bearish confirmations, look for the top wicks, look for failed breakouts, the bearish wicks, look for weakness for it to struggle at those levels. Once you get confirmation, wait for it to retest, for it to pop back up, and then look to scalp puts in and out for a nice quick day trade. Now, in terms of where we're at heading into tomorrow, this is what I want you to understand. SPY closed at 412. So with that being said, that's going to be a make it or break it level. And is this a significant level on the daily chart? Yes, this is going to be a fairly significant level on the daily chart. You can see right here, 411.74. This is a make it or break it level on the SPY, this 411.74, because you could see right here on this day it topped out at 411.74 and it ended up closing at 401.44. It had a massive pullback and it continued to sell off. So this is a key resistance level with big downside potential. So for the micro, I want you to think of this as a make it or break it level. If the SPY, once the SPY turns 412 into support, it turns into the floor, it starts holding, it starts consolidating, it pushes to 413. Once it pushes above 413, which was the high of day on Friday, it will then rip up. If it could turn 413 into support, we will be on track to fill the gap at 417.39, which is where we're expected to see a micro bull trap if 412, 413 turns into support and breaks out, right? So that's the upside theory. Now for the downside theory. If you see SPY go red tomorrow, if it's red, if you see it opening up lower than it previously closed, 412, that will be the best price for puts tomorrow, the previous closing price if it's red. Now, if it's not red, you can wait for it to go green to red if that occurs and scalp puts in and out at the previous closing price, 412. And you can also wait for the best resistance levels, which would be truly 417.39. So I just want you to understand this is a pretty decent level to keep an eye on, this 412 level. If it breaks down and reacts as a resistance, we will start to see a nice little short-term micro pullback. The SPY does have a gap to fill at 406.07. For those of you who are interested in calls and potential reversal levels, 406.07, that would be a key level of interest for call options this week. So the two key levels in terms of buying the dip, if it has a pullback call options, 406.07 is make it or break it. If it cracks that, then the next level for calls is going to be 390.89. That is the best level. If we drop back to 390.89, that is where you really want to be scalping calls. So I want you to keep in mind, all of these levels that I'm giving you are relevant, and it's going to help you understand where the price is heading in terms of direction. I'm giving you the best key make it or break it levels to be scalping at. So if it reacts as a support level, you can try to buy it. If it reacts as a resistance level, you can try to buy puts. If it reacts as support, you can try to scalp calls. Get in, get out. If you're on the wrong side of the trade, adapt, switch sides, or just cut the loss and sit on the sidelines and wait for the next key make it or break it level. Now, you do have to understand there's a thing called overbought and a thing called oversold. So in terms of the best overall levels, in terms of this week, 406.07 is going to be a significant level. Your true best level on the calls is going to be 390.89. I strongly believe if it pulls back, in August at 390.89, we are likely ripping back up at that level. Pay attention to that level. I'm telling you, these trades, I'm giving you seeds, right? So if you set these price alerts, like I'm doing, you set these price alerts, you're going to create seeds. You're planting seeds. And then once these price alerts trigger, you're going to put yourself in a situation where you could trade the best setups at the best prices, where most people aren't watching because they're not watching charts all day, every day, and they're going to miss out on plays because there's so many stocks to be watching, et cetera, et cetera. You got to set price alerts. You got to trade smart, work smart. So with that being said, the true best levels, 429.06, this 417.39, 412 is going to be an interesting level, kind of the middle of this channel, 406 and 390.89. So those are the four best levels. Again, one more time, 390.89, 406.07, 412, and 417.39. Those are your best levels for the SPY. Make it or break it. The higher the better in terms of puts, the lower the better in terms of the calls, right? So oversold, overbought. See how they react. Now, let's go over the stocks. For those of you who stay to the end of these videos, you truly do get rewarded with the best information. As you can see, Tesla. This is what Tesla loves doing. In terms of gap close reversals, that's when a stock fills a gap. You can see right here, Tesla gap down, meaning it opened up lower than it previously closed, right? It was downtrending during extended hours trading, whether it was after hours pre-market, opens up lower than it previously closes, it gaps down. It shoots back up, and then it fills the gap. Once it fills the gap, it has a reversal. I see this happen all the time with Tesla. It's a very generous stock to use gap close reversals on, right? This was a put opportunity right here, and this was a call opportunity right here. Oversold support, fills the gap, nice wick, rockets back up for the reversal, right? So what I'm telling you is this stock is great for gap close reversals. It's a phenomenal trading opportunity for gap close reversals. And we are currently approaching basically the highest gap to fill above. Pretty much the highest gap to fill above on Tesla is going to be right here. There's a gap to fill on Tesla at 952.62. That is going to be the best level to buy Tesla puts. So set the price alert, 952.62. Once it fills the gap, you see it reacting as a resistance. It's struggling. Buy the puts. In terms of the options that I'm scalping, I am going with the strike price that is as close as possible to at the money. I'm doing at the money strikes. So if Tesla's trading at 952 and the closest put strike is 950, I'll do the barely out of money strike, the closest out of money strike, the closest at the money strike. Basically, that's what I'm doing. In and out like a sniper, making a quick 30 to 50% ROI on the trade. This will be the best level. Do not underestimate the power of a gap close reversal on pretty much the highest gap to fill above at a nice key whole round resistance number. I'm telling you, Tesla puts at that level. That is the best price at the best setup. You're going to see YouTubers post their live trading videos of them buying puts at this price, banking. You're going to see it. People are starting to see the potential of this strategy. You're going to see it. It's going to be around YouTube. The sharp traders, they're going to be all over this level. So 952.62, what I want you to understand is Tesla's not an ideal stock for small accounts. If you trade options with a small account, it's just not ideal. The contracts are too expensive. The momentum and volatility is too high, which is going to put you in a situation where the loss just isn't going to be small. It's not going to be a small loss, and it's going to be hard to let the trade play out because of the volatility and the high price of the contracts, right? And you do not want to go far out of the money. So if you have a small account, I would avoid Tesla and I would just master SPY. If you have a slightly bigger account, I do believe there's certain key prices where if you have a smaller account, it's okay. But for the most part, stay away from Tesla. But this will be a good level for most accounts. But I recommend medium-sized account, at least a medium-sized account. So I just want to bring awareness to that. This is not an option chain for small accounts. If you trade Tesla with a small account, you will blow up for the most part because it's too volatile. The momentum is too high. You can't let the trade play out. You'll be stopped out instantly, right? It's like you got to time it near perfect. It's moving too quickly, and the contracts are priced too high. Those are the reasons why. Now, there is key levels where you do want to show interest in Tesla, and what I'm telling you is puts at 952.62, closest at the money strike. Make a quick in and out scalp. That's the best level. These trade ideas right there, like I said, be patient. Set the price alerts, and then execute on the trades with the confirmations I teach you throughout these videos and within Trader Society. These are easily going to make back the cost of Trader Society. Easily. It's a one-time fee. It's lifetime access. These trades that I'm giving you, that I'm preparing you for with these key levels, you write these down, you set these price alerts. These are the best trades possible. These are the trades that will easily make you back the cost of Trader Society. So with that being said, make sure you're focused on trading these setups. These alerts can trigger this week. They can trigger, later into August. The point is, at some point they should trigger, and once they trigger, you are going to be in a situation where you're trading the best setups at the best prices, and you're well aware and well ahead than everybody else, and you'll be on top of things, right? So Walmart's getting very interesting. We discussed in terms of Walmart. You could see right here in terms of the daily chart, key support level, reacts as a resistance, earnings comes out, massive gap down, continues to sell off, new 52-week lows, bounces back up towards this previous support level, it tops out, it starts to sell off, another reversal, it's turning previous support into reversal. And then you can see right here, history repeat itself. It goes back to previous support, reacts as a resistance for 2 days, earnings comes out, history repeats itself. It sells off at that exact key level. So it had an overreaction to the downside, and now it's having an overreaction to the upside. So what I want you to understand is, in terms of Walmart, it has been consistently topping out towards this key support level, this 132 level, right? So I want to bring awareness to this again. This is the make it or break it level, $132. There's a gap to fill. It already filled the gap at 132.02. So we're waiting to see how this reacts, right? We're waiting to see how Walmart reacts to 132.02. If it reacts to support, then it's bullish. It's going to try to uptrend. For it to go super bullish, it has to break above 33, that previous support that's been reacting as resistance for multiple occurrences. Now, if you see 132 react as a resistance, it cracks below 132, you will want to scalp puts. You are going to want to scalp puts on Walmart. This is what we love to see, an overreaction. A stock that has a massive gap down, it rockets back up, it fills the gap, and then it is our job to identify if this is a floor or a roof, if this is support, a floor, or a roof resistance. Once we identify how it reacts at that level, we enter the trade accordingly. And we can always cut the loss quick, adapt, and switch sizes if we like. We don't have to switch sizes. We can sit on the sidelines, right? Because we're not going to be right all the time. But it is our responsibility to determine, to plan ahead, trade the best setups at the best prices, and then to determine how the stock is reacting. If it's reacting as support, if it's reacting as a floor, or if it's reacting as resistance, reacting as a roof, right? And you do that by watching it. You do that by studying how it reacts. If it's reacting as a strong floor, forming bottom wicks, breaking out, or reacting as a strong roof, resistance, breaking down, forming top wicks. We do this by mainly analyzing the candlesticks. And this can typically be determined when they trade at these key levels. Within the first, I would say 5 to 10 minutes, it can typically be determined, right? So that's the analysis on Walmart. 132 make it or break it level. Pay attention to that for a very, very nice scalp. XOM. So in terms of XOM, you could see right here, we are approaching the gap on the daily, and this is the highest gap to fill above. So it's the best opportunity to buy put options right here, $100.46. It is truly a blessing in terms of the opportunities that the market is going to providing us heading into August, because we are trading at such key make it or break it resistance levels, gap fill levels, and such overreactions to the upside where we're due for some sort of small pullback. Even if the bulls have shown strength in taking some control for the macro, we are due for some micro pullback. And what I'm doing here is I'm giving you these key make it or break it levels where we're likely going to see that micro pullback, so you can scalp put options literally at the bottom of the contracts and at the top of the stock and make a very nice lucrative trading return to make back the cost of Trader Society easily. So XOM, the key gap close reversal level is $100.46. It's significant because it's towards the all-time highs and it's the highest gap to fill above. So that's what you want to do. You want to focus on overbought high gaps for puts and oversold low gaps for calls. You can do this all day, set the price alerts, rinse and repeat every single day. When the stocks gap up and gap down, you can do this. And the alerts are going to compound, and your opportunities and your trading plans are going to compound just like your account if you're following the rules and sticking to risk management and position size. So that's the level for XOM. And like I said, we're scalping very quick in and out. With that being said, META, we're due for some sort of bounce. We truly are due for some sort of bounce. It filled the gap and it bottomed out twice. It is forming lower highs, but it's due for some sort of bounce. For this to go bullish, this is what needs to happen. If you want to know when META is going to break out like crazy, so the best level you can dip by this at is 155. That's the best level. 155 is the best level you can dip by this at now with like a tight $1 stop. Now, in terms of the breakout, it needs to break above 160.72. 160.72, if it breaks above that, it is likely going to skyrocket. It needs to break above 160.72, and it needs to turn that into a support level. If that does happen, we will likely see a break above 161.50, and then it starts to skyrocket to fill this gap here at 169.58. So in order for this gap to start to fill, this resistance has to break out and turn into support. Was there ever a bullish reaction to buy META stock at this resistance level? No, there wasn't. There was no bullish reaction. It reacted as a resistance right here. It gapped down right here, which is bearish. It formed lower highs. It did bottom at support on Friday, right? But there's no bullish reaction. There's no bullish reaction. I mean, you could have tried dip buying it. That's fine. You could have tried dip buying it. But as of now, there was no bullish reaction to buy the breakout. And in terms of buying stocks, I hate buying the breakouts. I like buying the dip. And in terms of puts, I try to stay away from key breakdowns. I try to focus on resistance, the buy low, sell high theory. That's what I like to focus on with these unique gap trading strategies. I don't like buying breakouts, and I don't like buying puts on breakdowns. But in certain situations, I'll be willing to do it, but I do not like doing it. Let's talk about earnings, right? Some of you guys are wondering about earnings, right? If that's your strategy, if you want to swing trade through earnings, by all means, it's your money. You do you. I want to share with you some of my analysis on these charts. I'm overall bearish. As of now, I'm bearish. I'm bearish on Kellogg's for earnings. I'm bearish on, what's the other one? Crocs. This one I'm super bearish on. I'm super bearish on Crocs. I personally think out of all the earning plays that I've studied, the ones that are on my radar right now, are Crocs and Kellogg's. I personally think this Crocs, I think Crocs will be the one where the puts are just gonna print. It's just such a micro reaction move to the upside from 46 to 71, right? It just seems like it's too overextended. It's too good to be true to have some sort of massive gap up with the earnings. I don't see this stock being valued at such a significant price. So for this one, if you're going to do a YOLO into earnings and take a small position size, if you're doing a lottery ticket, that's what this is, right? It's not a proven strategy. It's literally a lottery ticket. If you're going to hold through earnings, I would say my favorite play right now is put options on Crocs. That's what I would look into if you're someone who's interested in trading earnings, right? If you're looking for something more guaranteed, something really strategic with risk management and position sizing, I personally think options trading is a game of risk management and position size. And it's a game of taking advantage of these very lucrative trading opportunities that don't come around often, that have very low risk with very high reward if you know how to minimize your risk. It's really a game of position sizing and understanding certain times where you could take advantage of the market, where it's just one of those no-brainer situations where it's just obviously going to pan out. In terms of earnings, it really doesn't work like that way. Anything can happen with earnings. Anything can happen. But with that being said, in terms of YOLOing and earnings, I genuinely believe that Crocs puts would be your best play into this week. I personally think it's a trash stock. It's way too overextended and it's due for a pullback. So I would rather have puts if I were holding through earnings. Kellogg's, I mean, this is a lot better stock. This is a very strong stock. I would push towards puts on this one, but I don't like diversifying. If I were to go with one, I would go with Crocs. I would do Crocs puts. Like Kellogg's, I'm bearish for earnings on this one as well. But it's a strong stock. It's a strong overall stock and it's bullish. Crocs, I cannot say the same for. This is a terrible stock. So I would go with put options on Crocs. That would be the number one play. I do find Kellogg's interesting, but the problem I'm seeing with puts for this one is it's a fairly strong stock. It keeps pushing for new all-time highs. It's actually a good company. CROX, this is not worth the value of what it's trading at. This is heading straight to. I'm telling you, you want to know what this is going to be? I genuinely believe it's going to be Roku all over again. You guys saw what happened with the Roku earnings, 85 to 65, massive gap down, trash stock, right? One of Kathy Wood's biggest investments, I believe. I genuinely believe Crocs is going to be the next Roku. That's how I see it. I'm looking at this and I'm like, wow, it looks just like Roku. And I'm looking at the company, I'm looking at the chart. There's just no reason for this to maintain its gains. And if you study how it's been performing with earnings, massive gap downs. I'm someone who really doesn't play earnings, but there are certain plays where I'm willing to do a lottery ticket. And personally, I'm going to do it. I'm not sure when I'm going to enter these puts, but once I get this bearish confirmation, I might be willing to enter maybe even a day before earnings. I have to see. But the point is, I'm buying puts. I'm holding through earnings. I'm going to disclose the alert. It's a lottery ticket. It's a high risk reward situation. And it's a complete lottery ticket. But that's my thoughts on CROX. You guys know last time I told you guys Walmart puts. People were asking me, what do you think of Walmart, for earnings? I literally told them puts. It gapped down massively. I think Crocs is going to be the next one, and I'm going to play Crocs. So, yeah, just understand it's extremely high risk, and you can lose everything you put in. So this is not like a proven strategy. This is not a consistent strategy. It's a lottery ticket. That's what it is. This is one of those situations where you buy a put, you hold through earnings, and you can lose everything. That's what people call easy money. It's a gamble. It's a lottery ticket. Trading isn't easy. It's not as easy as that, right? So it's very easy to lose everything because it's such an easy trade if you were to bank on it. So yeah, that's how I see it. So our last stock is gonna be SIGA. So in terms of SIGA, within Trader Society, let me pull this. Hold up, let me refresh the chat here real quick. Give me 1 second. So within Trader Society, I actually invested into this one. I was talking about investing into it next week. It ended up having a massive pullback earlier than I expected, so I pulled the trigger. So I alerted this one in real time in terms of Trader Society. With that being said, wait, why isn't this? I think I gotta unpin it. Oh, there we go. So yeah, I alerted this one in real time when shares were trading at 1570. I held it overnight for a swing trade. It's now up 8% in after hours. So you know what's going on with this whole monkeypox craze and all this stuff. It's one of those YOLO plays. I'm comparing the chart. I'm comparing Siga to mRNA. They're looking very similar. So this really isn't an investment. It's not really an investment. It's more of like a swing trade. But I'm looking at the charts, and Siga, it could be one of those big ones. It genuinely can be. Not saying it's going to be, but in terms of like if I were to invest or gamble into something, this would make logical sense because of the whole monkeypox situation. I mean, if this goes nationwide or something like that, this can send this like crazy. But in terms of right now, this is just a short-term swing trade. I bought this at $15.70. It's now trading in the 18s. That was literally real time within Trader Society. I stayed away from options on this one because the IV was way too high. So I just bought shares. I have 2,000 shares on it. And one of the main reasons I bought this, it's mainly a technical play. So you could see right here, Siga stock has a massive sell-off, right? It has a massive move to the upside, massive sell-off, overreaction to the upside, overreaction to the downside. It fills the gap right here. It bottoms at the gap fill and rockets back up. So I'm seeing the same pattern where Siga stock has an overreaction to the upside and now an overreaction to the downside. There was a gap to fill at 12.16. The gap almost filled. It got to 13.40, so close enough. And it formed very bullish candlesticks, very sharp trend reversal candlesticks on multiple time frames. I mean, you can see right here, just look at how bullish that looks once it nearly filled the gap. And we know how Siga stock likes to react when it has these overreactions to the upside. It tends to recover and it tends to bottom out for the short term. Once it fills that gap, and the gap nearly filled. You can see right here, it's the same pattern, right? So it is currently on track to gap up. For this to continue to run for the micro, it needs to stay above 17s. 17s needs to hold and turn into support. See, look, this is how you know when a stock is going to tank like crazy. Well, this is how we know now. 17 is a key support level. Nice wick, nice upside potential. If this level cracks, big downside potential to fill the gap below. So you know if you're long on Siga stock and it cracks 17, you must cut your loss. Because you know if $17 cracks, this is now proven to be a big downside micro potential level where it sells off rapid fire to 13.40. And you also know there's a gap to fill below it in the 12s that hasn't filled yet, which still can easily fill within the time, right? So that's a make it or break it level. And the biggest mistake people do is they hold through make it or break it levels when they're wrong. That's what you need to understand. All these levels I give you guys, these are the best levels to be trading at. These are the most volatile levels. These are the most rewarding levels. But you need to understand, no matter how overbought or no matter how oversold that stock is, if it does not work at that make it or break it level, you must cut the loss quickly, because instead of having that huge win, it's going to be a huge loss if you hold against the make it or break it level, right? So this is just a prime example. If you bought Siga stock and it cracks 17, the chart says this can sell off rapidly to 13.40, and there's a gap to fill in the 12s. So people who lose big are the ones who hold through make it or break it level. So if you're long on Siga stock and it cracks 17, those are the losers. The losers are the ones who do not sell, get stopped out, small win, small loss, and they hold through it. Those are the losers. The losers are the ones who hold through make it or break it levels. You have to respect. We are trading the best setups at the best prices. If it does not work at these prices, we must get stopped out accordingly. We must hold our losers less than our winners. You have to figure out what's your average holding time per win. And then you need to make sure that your average losing time per loss is less than your average holding time per win. That's how you can take smaller losses. Sizing in accordingly. Size in 10 to 20% of your account per trade. If you're just starting out, don't trade with a lot of money. You could paper trade at first and size in light. Do 10% of your account. You put in 10% of your account into an option trade, you make a 10% return on the quickest expiration, quick in and out scalp, 10, 15 minutes. That's a 1% return on your portfolio. You do that, rinse and repeat, compound it, and then it just goes up within 1 year of consistency. It can change your life, especially a 2% return average compounded daily, where you consistently compound your account and you're consistent with a 2% return, right? You know, with these options, you can make a 30, 40, 50% return. You're putting in 10% of your portfolio into those trades. That's a 3, 4, 5% ROI within one single trade. Scalp, like a sniper, made in minutes. So just to understand, that's how big losses are created. For people who don't get stopped out, they get in at the best entry, but they need to understand their entry is nearly a stop loss. That's what they need to understand. If it cannot work at your level, you must get stopped out very, very quickly. And you have to get the best entry in order to do that situation. So that's my thoughts on Siga. $17 is make it or break it. If it holds, I think we start to rock it. But this is the make it or break it level for this week, guys. $17. $17 is make it or break it. If it cracks, big sell off, short. If it holds, we will be on track to 1850. If it goes above 1850, we go to 20. If it fails to go above 1850, it goes to 17. If it cracks 17, it sells off hard. If it holds 17, it goes to 1850, make it or break it. Goes above that, then $20, right? So that is how you trade the best prices at the best setups within Trader Society. You will see the full live trading footage of these upcoming potential trades. They're going to be called out live on stream at market open. They're going to be called out within the voice channel within the Discord chat room, right? So I got the plan set, I got the price alert set, and we are now prepared to trade the best setups at the best prices. If you do want to join Trader Society, it's going to be the first link down below in the description. Everything is explained in terms of what you get access to, and for a limited time only, you will also get access to the small account challenge that will teach you how to grow a small account. I'm telling you, one of the biggest edges with the options is understanding how risk management and position size works with them. That's the biggest edge, not holding and hoping, trying to win big. The edge is in the risk management, is figuring out how can you minimize your risk with a bigger reward, putting in less capital, minimizing your risk, and getting a bigger percentage return back. I figured out how to do that with the options, and that's what I'm going to show you guys how to do. If you do big position sizes, your account is going to fluctuate like this, and then it's just going to have a sharp move down. If it has a sharp move up, it's going to come right back down. I'm telling you, I've been studying options long enough to know that you need to size in accordingly. 10%, 20% of your account per trade max. Use a cash account. Never go above 20%. If you want to be super high risk, 30% of your portfolio in a trade, would not recommend it. Start with a small account first. Start with a cash account. You got to pay your tuition to the market. You got to lose first to learn from your mistakes. That doesn't mean you have to lose a lot of money. You can paper trade first. You can trade with a small account first, with a cash account, gain experience, gain that practice, and then you'll see once you have this tweak down when it clicks with risk management and position sizing, you'll see how fast you can scale and compound a small account. So if you want to be a part of Trader Society, where you get instant lifetime access to live trading streams at market open, you get to watch me trade live, to the voice channel where you get to hear my voice, live trading commentary, real-time trade alerts, entries, and exits, the Discord server, the networking opportunities within the Discord server, the video lesson library where you get to learn how to trade the best setups at the best prices, the unique gap trading strategies, how to create a trading plan, where to enter, where to set your stop loss, where to set your price target, risk management and position sizing, mindset trading, psychology trading. And I'm telling you, the biggest edge, that risk management and position sizing, along with these trading plans, it is going to set you up for success. You are going to see a new way of trading options that has never really been exposed before, because it's focused on risk management and position sizing. It's not focused on hitting big, going all in. It's focused on putting yourself in the best possible position to succeed as a trader. And you will see how much you can learn in such a short period of time. And, you know, in terms of learning from your mistakes, it's not going to cost a lot if you do it the way I'm doing it. You start with a small account, use a cash account, size in 10 to 20%, learn from the mistakes. And then once you learn from the mistakes and other people's mistakes, you just have to make sure that you're disciplined enough to not make the same mistakes again. Once you have that knowledge, once you have that discipline, once you have that knowledge, from there, you're just building discipline. You're building a habit, right? You're training to make sure you don't make those same mistakes live in the market, right? And then when you got it, and that account will scale, and it scales quickly. 1 year of this can change your life. If you want to be a part of it, it's the first link in the description. Lifetime instant access. You can start trading with us live tomorrow at market open. I will see you guys then. I'm looking forward to it. August is expected to be a phenomenal trading month, and the small account challenge will continue on Monday. I will see you guys then.